Hi, welcome to your review session on bank reconciliation statement. Before we get started, I'll just give you a brief on this chapter. Bank reconciliation statement is a statement that's prepared as at a particular date, and it is a statement that reconciles the balance between the bank balance from the cash book and the balance as per the bank statement or the passbook. So the passbook is the document or the statement that the bank sends to the customer, and the cash book is the account that the account holder maintains as part of his books of account. So there could be various reasons for difference between the balance as per the bank column of the cash book and the balance as per the passbook. And bank reconciliation statement is the statement that spells out the reasons for the difference between these two balances, and it is prepared as at a particular date, and the responsibility of preparing this bank reconciliation statement is the customer's responsibility. And the bank reconciliation statement is not part of the financial statements. It is used as a control tool. Next thing that we need to understand with respect to BRS is that the reasons for the difference between the balance as per the bank column of the cash book and the balance as per the passbook could be two: timing differences and errors. Timing differences means the time at which certain transactions are recorded either in the cash book or in the passbook. For example, checks issued but not yet presented for payment. When checks are issued, the moment a check is issued, the cash book is credited and the customer is debited. But only when the customer deposits the check in his account does the passbook reflect the same entry. So till such time, the bank column of the cash book will show a lesser balance than the balance as per the passbook. Similarly, checks collected but not yet deposited. When a business receives a check, immediately the bank column of the cash book will be debited. So the bank balance as per the cash book increases, but a corresponding increase will happen in the passbook only when the checks are sent for collection or when the checks are deposited. So till such time, the balance as per the cash book will be higher than the balance as per the passbook. So this is timing difference. Then what are errors? Errors can be both on the part of the customer and also errors committed by the bank. Right? For example, instead of putting, when we issue a check, instead of putting it on the credit side, if we put it on the debit side, then the balance as per the cash book will be higher than the balance as per the passbook. Similarly, there could be an error at the bank's side also. When a bank receives a check on behalf of a customer, instead of crediting the customer's account, if it debits the customer's account, then the balance as per the passbook will be less than the balance as per the cash book. So these are the possible reasons, or two broad categories of reasons for difference between the balance as per the passbook and the balance as per the cash book. Another important thing to note is that the passbook is a mirror image of the cash book. That is, when a check is received by the business, cash account or bank account is debited and the customer's account is credited. The entry will be bank account debit to customer's account. So any debit to the cash book represents an increase in the cash balance because cash is an asset. When this check received from the customer is deposited in the bank, for the bank, the customer is a liability, and so when the bank receives the money in custody for the customer, it will credit the customer's account. So any debit in the cash book will have a matching credit by the bank in the passbook of the customer. So the passbook is a mirror image of the cash book. So when your cash book has a debit balance, it is a favorable balance, and if there are no differences, this debit balance in the cash book should be equal to the credit balance as per the passbook. So when the passbook shows a credit balance, it means that it is a favorable balance. If the bank column of the cash book has a credit balance, it means that it is an overdrawn balance, and the passbook should reflect a debit balance for that customer, which again represents an overdrawn balance, right? So with this brief introduction in mind, let us look at the questions. First question is, credit balance in the cash book means. So as I just told you, when the cash book shows a credit balance, it means that it is an overdrawn balance, because cash is an asset, and if an asset shows a credit balance, it means that it is overdrawn, right? So a credit balance as per the cash book would mean overdraft or an overdrawn balance as per the passbook. So answer is A. Next, bank reconciliation statement is A, part of cash book, B, a ledger account, C, a statement showing the causes of difference between the cash book and passbook balance. Answer is C. So it's not an account, it's not part of the cash book, it's actually a control tool. You cannot call bank reconciliation statement as a part of your financial statements also. It's only a control tool in order to have a check, or in order to have a control on what are the reasons for the difference between the bank column of the cash book and the passbook. A BRS is prepared with the help of, yes, so since we are reconciling the balance as per the bank column of the cash book and the balance as per the passbook, so obviously what we need in order to prepare a reconciliation statement are the bank column of the cash book and the bank statement or the passbook. So answer is A. Yes, a fourth question is, yes, it's again a different version of the third question. It says a BRS is prepared to know the causes for the difference between the balance as per the bank column of the cash book and the balance as per the bank statement or the passbook. Next, payment received by the account holder through a check is entered. Okay, so here we are trying to understand the timing of recording in the passbook or the cash book. So since the questions explicitly does not say where it is getting recorded, we'll have to go through the options and then answer this question. So option A, it says, see, the question is payment received by the account holder through a check is entered in, okay, the passbook at the time of receipt of check, the cash book at the time of collection of check, the passbook at the time of collection of check, none of these. Okay, so here the account holder is receiving a check. So when does it get credited to his account with the bank? It will get credited to his account at the bank only at the time of collection of check and not at the time of receipt of check. Okay, so when we deposit the check in a bank, it has to go through a certain collection process. It takes about 3 days, and after which the amount gets credited to the passbook of the account holder. So this will be entered in the cash book at the time of receipt of the check. But since that option is not available, the answer is C, the passbook at the time of collection of check. Question 7. Direct payment received from third party on behalf of account holder is entered in. Option A, the cash book when the amount is received by the bank. B, the passbook when the amount is received by the bank. C, the cash book when entry is posted in the passbook. None of these. So here a direct payment is received from a third party on behalf of on behalf of the account holder. So when the account holder directly pays into the bank will credit the account of the account holder when it receives the amount. The entry for this direct receipt into the bank account will be made in the cash book only when the customer or the account holder receives the bank statement from the bank. Till such time, or unless he receives an intimation from the bank, till such time the account holder will not be aware of such credit to his account. So the answer is B. A check of rupees 2345 issued by Miss Meena was recorded in the deposit column as 2345 to ascertain the balance as per cash book of Miss Meena. Okay, so here there is an error, and there is an error in the passbook, right? So when a check has been issued by the customer, it should be recorded in the withdrawal column by the bank. Instead, it has been recorded in the deposit column. And what are we trying to do? We are trying to find out the balance as per the cash book, from starting with the balance as per the passbook. So here the balance as per the passbook will be higher than the balance as per the cash book. So in order to arrive at the balance as per the cash book from the balance as per the passbook, we have to subtract double the amount. So the answer is rupees 4780 should be subtracted from the balance as per the passbook to arrive at the balance as per the cash book of Miss Meena. Next, question number 9. Debit balance as per cash book of ABC Enterprises as on 31/3/2007 is rupees 3000. So debit balance as per cash book means it is a favorable balance. Checks deposited but not cleared amounts to rupees 200. So checks have been deposited but they have not yet been cleared. Amount is 200, which means the balance as per the cash book is higher than the balance as per the passbook. And we are required to find out the balance as per the passbook. So we are moving from the cash book to the passbook, and so we have to subtract 200. So as of now, the balance is 2800. The next difference is checks have been issued but not presented, rupees 300. So when checks are issued, cash book is credited, which means the balance is less than the passbook balance. So since we are moving from the cash book balance to the passbook balance, we have to add 300. So we just arrived at a balance of 2800, to which we add 300. So now the balance as per the passbook is 3100. The bank has allowed interest amounting to rupees 100 and has collected dividend rupees 100 on behalf of ABC Enterprises, which means with respect to these two incomes, the passbook balance is higher than the cash book balance. So this 200 has to be added to the cash book balance to arrive at the passbook balance. So we arrived at the cash book balance till this stage at 3100. We have to add 200 and we get the passbook balance as 3300. Next, while preparing a BRS, taking the balance as per the cash book as the starting point, checks deposited but omitted to be recorded. Okay, so here there is an error in the cash book itself. You have deposited the checks but you have not recorded the receipt of the check in the first place, which means that the balance as per the cash book is less, and so the checks that have been received should be added to arrive at the balance as per the cash book. So answer is A. While preparing a BRS, taking the balance as per the cash book as the starting point, an undercast of bank column on the debit side of cash book. Okay, so there is an undercast of the bank column on the debit side of the cash book. So debit side of the cash book records all the receipts of checks. So there is an undercast, which means that the balance as per the cash book is less. So we have to add the undercast to arrive at the correct balance of cash book. Next, while preparing a BRS, taking the balance as per cash book as the starting point, an undercast of bank column on the credit side of cash book. So the credit side of the cash book records payments. There is an undercast of the bank column on the credit side, which means that payments are recorded short, which would in turn lead to an increase in the cash balance, and so we have to subtract the undercast in order to arrive at the correct balance of cash book. See, while preparing a BRS, taking the balance as per cash book as the starting point, debit balance of rupees 112 brought forward as credit balance of rupees 121. So debit balance of 112 has been brought forward as credit balance means a favorable balance has been converted into an unfavorable balance of 121. which means we have to convert the unfavorable balance to a favorable balance, which means we have to add 233. We have to add 233 to minus 121 technically to arrive at the correct opening balance in the cash book. Next, while preparing a BRS, taking the balance as per cash book as the starting point, a wrong credit in a passbook. Okay, so here there is an error in the passbook. There is a wrong credit in the passbook, which means that the balance as per the passbook is higher than the balance as per the cash book. And we are starting the BRS taking the balance as per cash book as the starting point. Okay, so in order to arrive at the balance as per passbook, starting with balance as per cash book, we have to add the wrong credit. Next, while preparing a BRS, taking the balance as per cash book as the starting point, a wrong debit in passbook. Okay, so here again there is an error in the passbook, and there is a wrong debit in the passbook. So when there is a wrong debit in the passbook, it means that the balance as per the passbook is less than the balance as per the cash book, and we are reconciling the differences taking the balance as per cash book as the starting point. So we have to move from a higher number to a lower number, and so we have to subtract this wrong debit in order to arrive at the balance as per the passbook. Next, while preparing a BRS, taking the balance as per cash book as the starting point, an undercast of deposit column in passbook. Okay, so here again there is an error in the passbook. There is an undercast of deposit column in the passbook, which means that the balance as per the passbook is less than the balance as per the cash book. And we are starting the BRS taking the balance as per cash book as the starting point, and so we have to move from a higher number to a lower number. So we have to subtract the undercast to arrive at the balance as per passbook. Next, while preparing a BRS taking the balance as per cash book as the starting point, an undercast of withdrawal column in passbook. Okay, so when the withdrawal column in the passbook is undercast, it means that we are showing less withdrawals, and hence the balance as per passbook will be higher than the balance as per the cash book. And here we are starting the BRS taking the balance as per cash book as the starting point, which means that we have to move from a lower number to a higher number, and so we have to add the undercast. Yeah, question number 18. One outgoing check of rupees 112 has been recorded as 121 in the cash column in the cash book. Okay, the check has been presented in the bank. When the balance as per cash book is the starting point, what are we supposed to do? See here, we have issued a check for 112 rupees, but it has not been recorded in the bank column of the cash book. It has been recorded in the cash column of the cash book, which means first of all there are two errors. First of all, one error is omission of recording 112 in the bank column. The second error is showing 112 as a cash outflow. 121 as a cash outflow in the cash column of the cash book. Right? So when we are preparing the BRS, starting with the cash book balance or the balance as per the bank column in the cash book as the starting point, our balance as per cash book is going to be higher because we have not recorded a check that has been issued of 112 rupees. So we have to subtract 112 rupees because it's already been presented in the bank. The balance as per the passbook will be less than the balance as per the cash book. So we are moving from a higher number to a lower number, and so we have to subtract 112. Next, one outgoing check of 112 has been recorded as 121 in the bank column in the cash book. Okay, so here there is one error. There is a transposition error. Instead of showing an issue of check as 112, we have recorded it as 121 in the bank column, which means that we have shown an excess withdrawal or excess payment in our cash book. So the balance as per the cash book is going to be less than the balance as per the passbook. So here we are moving from a lower number to a higher number, So we have to add only the difference of 9. Next, the debit balance of 112 as on the previous day was brought forward as a credit balance of 121. When the balance as per cash book is the starting point, we have to add 233 in order to convert an unfavorable balance to a favorable balance. Next, the payment side of the cash book bank column was undercast by 112 when the balance as per cash book is the starting point. Okay. See here, the payment side of the cash book has been undercast, means that we are showing less payments, which means balance as per cash book is going to be higher. And so we are moving from balance as per the cash book to balance as per the passbook. Moving from a higher balance to a lower balance, we have to subtract 112. Next, the receipt side of the cash book bank column was overcast by 112 when the balance as per cash book is the starting point. Okay, so here the receipt side of the cash book is overcast by 112 means the cash book is showing a higher balance. Rather, the bank column of the cash book is showing a balance higher than the balance as per the passbook. And we are moving from the cash book to the passbook from a higher number to a lower number, and we have to subtract 112. Next, a cash discount allowed of rupees 112 was recorded as 121 in the bank column. When the balance as per the cash book is the starting point, what are we supposed to do? Okay, so see, the problem does not specifically say on which side of the cash book it has been recorded as 121, but we know that the discount allowed column appears on the debit side of the cash book, right? Because the debit side records the money that we receive from the debtors, and so when we receive money from debtors and it's prompt payment, we generally give them a cash discount, and so logically on the debit side the cash discount column appears. So instead of recording 112 in the discount allowed column, 121 was recorded in the bank column on the receipt side of the cash book, which means that the balance as per the cash book is higher. Okay, balance as per the cash book is higher by 121, and hence 121 will have to be subtracted from the cash book to arrive at the balance as per the passbook. Next, deposit column of the passbook showed a wrong entry of 112 when the balance as per cash book is the starting point. Okay, so here the deposit column of the passbook is showing a wrong entry of 112, which means that the balance as per the passbook is higher than the balance as per the cash book, and we are starting with the balance as per the cash book in the BRS. So we are moving from a lower number to a higher number, and so we have to add 112. The withdrawal column of the passbook showed a wrong entry of rupees 112 when the balance as per cash book is the starting point, which means the balance as per the passbook is less than the balance as per the cash book, because the withdrawal column includes a wrong entry in the passbook, and we are starting with the balance as per the cash book, and so we are moving from a higher number to a lower number, so we have to subtract 112. Which of the following items is to be adjusted in the amended cash book? Okay, so this is one thing that we need to understand. See, it is possible to prepare a BRS before amending the cash book and after amending the cash book. What do we mean by amending the cash book? Amending the cash book means if the differences between the balance as per, if the reasons for the difference between the balance as per the bank column of the cash book and the passbook is because of errors that have happened in the cash book, or because of omissions to record certain transactions in the cash book, such errors and omissions have to be amended, after which we can prepare a BRS including, or rather comparing the amended cash book balance and the balance as per the passbook. So once the cash book has been amended for errors and omissions that have happened at the customer's end, then the items that will be included in the BRS will be only the timing differences and the errors that have been made by the bank. And we must keep in mind that the amended cash book balance is the balance that appears in the balance sheet as a current asset. Okay, right. So with this, let's look at the last few questions. Which of the following items is to be adjusted in the amended cash book? Uncollected checks is a timing difference. It cannot be adjusted in the cash book. It will appear in the BRS. Unpresented check is also a timing difference. It will not be adjusted in the cash book. It will appear in the BRS. A wrong entry in the passbook is an error by the bank. It will not appear. It cannot be an error by the bank, cannot be adjusted in the cash book. So it will also appear in the BRS. Then a correct entry in the passbook but not appearing in the cash book. So examples will be, let us assume a customer has directly paid into the bank account, or the bank has debited the customer for some bank charges, or let's say the bank has collected some interest, or it has collected some dividend on behalf of the customer. All these entries will appear in the passbook but will not appear in the cash book unless the accountant of the deposit holder receives intimation from the bank. Okay, so all this can be made, all these entries can be made in the cash book, and then we can arrive at the amended cash book balance. So D is the answer. Next, which of the following items is not to be adjusted in the amended cash book? Bank charges and interest charged by the bank. This entry should be made in the cash book. Interest allowed and direct payments by bank. This should also be made in the cash book. Direct payment by our debtors into the bank. Yes, this should also be entered in the cash book. Option D, a wrong entry in the passbook. So an error by the bank will not be adjusted in the cash book. It will appear in the reconciliation statement. Next, which of the following items is to appear in the BRS if the balance as per amended cash book is taken as the starting point? Bank charges and interest paid by the bank will not appear in the BRS because we are starting with the balance as per the amended cash book. Amended cash book would have taken into account all these errors and omissions on part of the account holder. Okay. Next, interest allowed and direct payments by the bank, that will also be adjusted in the cash book. Direct payment by our debtors into the bank, that will also be entered in the cash book. A wrong entry in the passbook will appear in the BRS. Next, which of the following items is not to appear in the BRS if the balance as per amended cash book is taken as the starting point? Okay, so when we start with the balance as per amended cash book and we are preparing a BRS, only two items will appear, that is the timing differences and errors by the bank. Okay, so here option D, a correct entry in the passbook but not appearing in the cash book, will appear will not appear in the BRS. It will be included in the cash book balance. Right. So with this we conclude the review session on bank reconciliation statement. In case you have any queries, please feel free to mail me at queries@greymatteracademics.com. And until next time, goodbye.